You're one of the most dovish economists on the street in terms of Fed hikes for next year. You see 1, Michael Feroli sees 4. This has to be a fundamental difference in how the two of you view inflation.
That's exactly right. We don't think there'll be much of a change in inflation. Inflation has been stable now for nearly 20 years. It's been in a very narrow range, despite big fluctuations in the economy, despite global expansion and contraction, despite big swings in commodity prices. We've learned, or we should have learned, that inflation has a great deal of inertia now. And it's really based now on expectations rather than economic fluctuations. And as long as inflation expectations are stable, it's likely that inflation will be stable as well. And I think the Fed's going to do enough. 2 more rate hikes this year, 1 more next year. That'll take the real Fed funds rate, adjusted for inflation, well over 0. It'll put it in positive territory. And that's going to have an effect on both economic activity and on expectations. The Fed is tightening before inflation goes up. And if they can control expectations, they'll control inflation.
Michael Feroli, 4 hikes next year. Debate Kevin Logan.
Well, so first of all, on inflation, Mike McKee earlier talked about the base effects on CPI. We're going to see something similar on core PCE. Could very easily get to 2% in March, right? So we're at the Fed's target, basically, for inflation. We're past it for unemployment. So there's no reason we shouldn't be getting closer to neutral, albeit in a gradual, steady manner. And I should add then, on top of that, and we saw this in Janet Yellen's editorial earlier this week, which is that we haven't even yet begun to really feel the effects of fiscal stimulus. So that's coming at us, we know, in the second half of this year in a big way. And that, we think, gives a further boost to growth when you're already at price stability, there, the Fed's definition, and already at full employment. So we think that further reinforces the case that the Fed has to get back to neutral and do that in a pretty gradual but steady manner.